Good morning, everyone. My name is Sam Deeb, and I'm a part of the distribution team here at Pinnacle. Today, I'm joined by Dr. Don Hampson, Managing Director and founder of Plato Investment Management. Thanks for joining me today, Don.
Thank you, Sam, and thanks, viewers.
So we're in the middle of reporting season now, Don, and it'd be valuable to hear about how you and the team at Plato are feeling about some of the most recent results and what they will mean for investors. We had BHP report earlier this morning, and they've announced a lower profit than last year. Was this in line with what the team at Plato were expecting?
It was, Sam. I mean, I know it's a pretty big number, 40% lower in terms of the dividend, 32% in terms of the profit, but commodity prices have been falling. We track them every day, and it's not a surprise that their earnings were actually down to that level. It was coming off a record year. They had an absolute cracker last year, and so it wasn't that unexpected. If you actually look at the breakup, about 80% of the reduction is due to lower commodity prices, and about 20% is due to wage inflation and cost inflation, which obviously we know inflation is running pretty high here in Australia. So, it's disappointing to see a lower yield, but even if you actually look at the yield on an annual basis, the gross yield's about 11%, just taking in this smaller interim dividend than last year, so that's still not too bad. Payout ratio was about 69%, so it's more towards the upper end. And look, they made some positive comments about they think things are improving in China, and obviously the dialogue with China is a lot less touchy these days. And actually look at it, BHP's run up pretty hard into this result because commodity prices and iron ore prices actually bottomed about 3 months ago. But of course, that's the number. Those low numbers were in the half-year result, and iron ore prices have bounced significantly, and that's probably the most significant reason for why BHP's share price is a lot higher than it was at its lows in early November.
Thanks for that, Don. Very insightful. COLs were another to release their half-year numbers, and they've actually lifted their interim dividend. Would you mind running us through their result?
Yeah, that was a pretty good result from COL's. Their profit was up about 11%. In fact, if you look at the underlying profit, was up even higher than that on their numbers. They're saying it's more like 17% because they're exiting an area. 9% increase in dividends, which is always good. And I think one of the standout things was they got no debt. They got net cash on the balance sheet. So they got a very lazy balance sheet, and they can, whether they want to use it for acquisitions or whatever, but that's just suggests that, a lot of Australian companies are still pretty strong. And I think it also reflects that we haven't seen, interest rates bite on the consumer staples type stocks like coal. So I think that's a pretty good result all up for shareholders.
Yeah, definitely sounds that way, Don. Was there any other companies that you'd like to highlight or draw attention to in the most recent round of results?
Yeah, look, a much smaller company, but an interesting result from Ampol yesterday. It was a great result, actually. It was a record result, so they had a great profit, significantly increased their dividend, their normal dividend. They increased from, I think, 41 cents last year to $1.05, fully franked. But they also returned another 50 cents to shareholders as a special dividend, fully franked. Now, I say this is interesting because if you think back last year, a few months ago, the Treasurer in his mini budget unexpectedly announced to be no more off-market buybacks, and Ampol's done a few of those in the last 4 or 5 years, particularly when they sell off things. And so their response to that is they obviously can't do a buyback because they've now been outlawed, but they're returning the money as a special dividend, which is what we sort of thought might happen because that's the only other way you can get rid of franking credits. So all up, that's $1.55 a fully franked dividend being paid, and the full year payout $2.75. So shareholders in Ampol are getting dividends, massive dividends there being paid out, and all fully franked.
Fantastic. Great story for yield. Thanks for the update as always, Don. The Plato Australian Share Income Fund is available on all major platforms. Investors can also access the LIC directly on the ASX under the ticker PL8. If you have any other questions, please do not hesitate to reach out to myself or a member of the distribution team at Pinnacle. Thanks and have a great day.